have the rand trading 7 rand 2 this morning, and of course it has weakened by about 10 cents from those best levels of 6.92 we saw on Friday. Euro's also been weakening. Can I ask you, I know we discuss this all the time, are we following the euro at this stage?
Morning, Stephen. Well, that's always the million-dollar question. Are we tracking the euro? And that relationship seems to be an on. Describe rand weakness entirely to just changes in the euro. What we saw is that foreigners have been net sellers of SA bonds in the past week, and in addition, yesterday we had vehicle sales come out much slower than expected, and that also followed some rather disappointing data last week. The PMI dipped back below the 50 level. So from a GDP differential perspective, the rand is perhaps looking not so attractive any longer, and in addition to bond sales, we saw the rand weaken.
Well, of course, most people are expecting the dollar to resume its weakening trend against the euro. So even if we're not following the euro directly, do you think we would then, just against the dollar, go back below that 7 rand mark, or do you think we're looking at a new range here?
I don't know, Stephen. You know, the rand, we saw the rand break through the 7 rand level, but then it seems to have encountered some resistance. It didn't make it as far as the next key level, which would be the 690 level. But then the rand's recent weakness has also been quite broad-based. So I think it would really hinge on what happens with today's data. We have the ISM non-manufacturing index as well as consumer confidence. So that would really, I think, dictate whether the rand's recent correction is going to be sustained.
And of course, really everybody's looking forward to those employment numbers coming out of the US on Friday, and those are really going to be key for the markets and for the dollar, aren't they?
Yes, absolutely, Stephen. I mean, the trend that we've seen emerge recently is that when US data is disappointed, the dollar has come under further pressure, and that's a departure from an earlier trend, which is when US data disappointed and global growth fears spiked, then we would see the dollar actually strengthen on the back of its safe haven status. So that's no longer the case, and we would expect that if today's data disappoints, and of course with the risk that the unemployment numbers are also going to disappoint, we could see the dollar weaken, and on the back of that we could actually see some renewed rand strength.
Of course, we've had a couple of central banks out with interest rate decisions. Today we had the Royal Bank of Australia keeping rates on hold, but we had the Bank of Japan cutting interest rates from 0.1% to 0%, and also setting up a pool of funds to buy government bonds and commercial paper. Your view on that move?
Well, Stephen, I mean, so Asian markets responded quite positively to the Bank of Japan's move, as well as the Australian Central Bank. So that should be rand supportive. But again, I think what people will really be focusing on is the direction of the US economy. And so later in the day, there is that risk that the rand could actually strengthen further if US data comes out worse than expected.
Anything on the local calendar that we're going to be looking at this week? I think we do have gold and forex numbers coming out a little bit later.
Yes, Stephen, we have gold and forex reserves out later this week, and that's obviously also going to be a key director of rand movements this week. Any indication that the Reserve Bank has been aggressively accumulating reserves could actually be negative for the currency.